Well, there's a natural pause there, so I'll stand up, even though I know we've got one lady still joining us. So, good afternoon and welcome to our Academy Forum. Nice to see you all in person. Obviously, our last one was online in February. If any of you need to catch up on any of the Academy Forums, they are on our YouTube channel, so you can go back, look at them, refer to them again, or again, send them around to your trustees if you need to send the link. So for those that don't know me, I'm Michaela Johns, one of the directors at HWB, and I head up the Academies team. And just introduce you to our other speakers today. So bear with us. We've had a last minute change in speakers. So I've got Gary Brown. Obviously, some of you will know Gary as well, director. Matt Cooper, associate director, and James Flood, director as well, all specialising in academies. But yeah, thank you guys for stepping in last minute. Some practical points before we start. There is no fire alarm expected. If the alarm does go off, please out front and into car park, follow us. If I could ask you to put any of your phones on silent, just so it doesn't interrupt flow. We are videoing the session. Any comments that you make, anything personal, will be cut out before it then goes up into YouTube. But again, you can then have a look at that or send it around to your colleagues who couldn't make it today. And then also, afterwards, we will obviously send you the slides and anything that we refer to, so that you've got those documents. There are some in the packs that are on your desk already that we won't be referring you to today. Okay, so first slide. So we will be doing some polls throughout. So if you want to scan in that Slido QR code, you can then join in the polls, and then we can get sort of a consensus of what's going on in the room. So I'll just give you a couple of seconds to just work your way through that.
So geez.
All right, so the agenda, just very briefly, we're going to try and aim for a lunch break about 12:45, and we'll be finished by 2. So first of all, we're going to have Matt, who's going to talk us through the changes to the Academy Accounts Direction, and then move on to talk you through the accounts approval process. That might be same as you have in your organisation, but just make sure everybody's got everything in order. Gary will then touch upon the update to the novel and contentious guidance that came out back in March. We will then discuss around the budget forecast return assumptions, which I know is an area that lots of you like to talk about. So I'll give you some facts and figures, and then what I'll do is I'll leave you to discuss over lunch in your groups, maybe mix up with other MATs or Single Academy Trusts so you can actually discuss some of the more detail. And then we'll bring that to a summary at the end and pop all the details on the flip chart so we can then send that out to you afterwards. I then wanted to touch upon a bit of fundraising and gift aid. After all, you are charities, so we're going to go through that. And then James will cover off the role of the governance professional or your clerk, as you might call them, and touch on property and valuations. So quite a jam-packed agenda, but we'll keep it flowing and make sure we keep to time. So over to Matt.
Lovely. Thanks, Michaela. Yeah, so I've got 3 areas to go through back to back. So I'm going to start with the accounts direction. So it was published back in March this year, similar to previous years, and it relates to the August 25 year end. I think as we've all kind of become aware and all know, it essentially sets out the guidance and the requirements for preparing the accounts. I think what would be quite useful this year, again, is there's not been an awful lot of changes. So I'm just going to kind of go over the key points and facts which have been updated in this year's direction. So the first one really is with regards to leasing. So it's not with regards to kind of the accountancy change, which we've covered at the last kind of couple of areas, couple of forums and trustee training. So it's about the greater flexibility given to trustees since the 1st of September 24. So really what they've kind of put in the direction is, even though it's kind of just one change to leases, there's a plethora of bits within the accounts which kind of get tweaked and changed. So I'm just going to kind of go through the main areas there. Um, so essentially, so from the 1st of September, um, greater flexibility is being given to academy trusts, where as long as kind of the type of asset is on the DfE approved list, then prior DfE approval is not required. So this kind of relates to items such as like IT equipment, catering, minibuses, those sorts of things. The main one it doesn't cover is with regards to land and buildings. I think quite naturally, given the size and the risk potentially there. So really just allowing stronger financial autonomy whilst maintaining oversight of the more risky areas. So, like I said, lots of disclosure changes. So, for awareness, really. So, where there are finance leases within your trusts, there'll be updated accounting policies. There'll be changes to the tangible fixed asset note, where kind of the value of the assets under finance leases are required to be disclosed. Changes to the creditors' notes as well. And then a new finance lease obligation note will be required, along with subtle tweaks in the cash flow statement and the net debt note. So, from your point of view, really, it's just kind of an awareness, making sure you're aware and kind of making sure trustees are aware. And then from your point of view, really, it's just kind of making sure that any leases are classified and calculated. So then when it gets to the year end, we're able to kind of pick those up, audit them, and make sure they're included in the accounts correctly. The next one with regards to large trusts. So just quickly, because it's not relevant to people in the room today. So it's where you've got more than 500 employees and more than 500 million in income. So it's really for the larger multis. So it's a new disclosure required under the Companies Act, section 414CB, for instance. There's a new non-financial and sustainability statement required, which just covers kind of climate-related risks and opportunities which relate to your trust. In addition to the accounts direction, so new model accounts are released. So in terms of changes there, again, not major. So the one bit just to point out, really, a couple of bits. So for Academy Trust with more than 50 million income, it goes from September 25, so it's relevant for next year's for awareness, is with regards to internal scrutiny, it's kind of mandating that it goes from a should to a must in terms of whether or not the internal scrutiny is carried out in-house or outsourced to an external expert, really, there. There's also subtle tweaking to the accounting officer statement, just rewording it slightly for transparency, and they've just added the 1st of April 27 date for the latest implementation of the valuation for a teacher's pension as well, so that'll be included when we draft the accounts. In terms of the audit report wording, so it's just clarifying that it relates to external auditors, just subtle tweaks on the wording, and then also wording of the assessment of going concern as well. So all standard areas which we include when we draft the accounts. Obviously, they've updated it throughout from the change from the ESFA to the DfE, so that's just wording update really there, which is fine. And then lastly on here with regards to other matters, so in addition to the accounts direction and the model accounts, the DfE also released the framework for external auditors. So in there, they've included new Annex A and Annex B, which essentially has new inclusions and requirements within our letters of engagement. So we're kind of currently going through a process of making sure that it's still compliant. So we'll be issuing new engagement letters out over the summer, ready for the new year. So, like I said, there really wasn't an awful lot of changes within the direction this year, so that was a key overview. We did issue kind of a fact sheet around at the end of March, early April. I think you've got in your handouts today. So again, as always, if there's any queries on those, then please do reach out to us. So we've got our first poll, if you'd be able to open your phones and have a look. So yeah, given the new rules to leases, if we have you signed up for a new finance lease. So whilst you're completing that, so just really wondering kind of from me throughout the room, kind of whether or not this greater flexibility will entice you into looking at the new leases. I guess there'll be more options available, especially particularly when it comes to like minibuses or catering, just having more options available that you'll have available. So looks like not many. So some in discussion, potentially one yes, couple in discussions, but mainly no. So it'd be interesting kind of see the reasons behind that. I think like we see on kind of non-Academy Trust clients, obviously finance leases are fairly normal. So yeah, it would be interesting to kind of know the reasons behind.
No money spent.
Yeah.
Yeah.
That is a good point.
Mhm. And then I don't know who has said yes, but anybody willing to share what type of asset you might finance leased? Usually it's sort of IT or something like that. We see it happening on.
I know one of my clients, it was a minibus.
I know it's early days, isn't it? Early days for everybody. So, but it is just another tool in the box if you need to use it, and you can commit to the repayment service. So, yeah.
Okay. Thank you. Next slide. So, as you can see, Photoshop's not my best skill, but I have tried to forge the next handbook. Yeah, we're still waiting. It's not unexpected. So it's due out probably the end of July if we go on previous year's experience. So the new one will relate to next year's account. So obviously the 2024 handbook, which we already have, relates to our year, which we're all aware of. So once it is released, we'll kind of create a back sheet, issue that round, and then we'll cover it off at the next forum and the annual chair trustees meeting training as well. So yeah, just a really quick one on that one. And then on to the next slide. Thank you. So yeah, my final slide today with regards to the accounts approval. So I thought it'd just be useful just to kind of go through a quick summary of the accounts process, right through from the beginning through to filing. So again, like you have in front of you. So we start with that preparation of accounts box. So essentially this goes from day one with regards to bookkeeping and the management accounts. It all feeds into what creates the trial balance, which then kind of gets uploaded to us. We draft the accounts and obviously complete the audit and regularity review. Once that's all drafted and we've kind of completed the compliance and disclosures required, we then have those debrief meetings with yourselves to kind of go through any queries, iron out any loose ends, and make sure everything's updated as much as possible. Next box there in terms of the review. So at that stage, the accounts in your audit findings report kind of gets issued to a delegated subcommittee, often finance committee or audit and risk. So again, we kind of present those accounts, go through any queries, and at that point, the finance committee essentially, what am I trying to say? Recommend for approval to the board of trustees. Thank you, Michaela. Yeah, so next stage in terms of the board of trustees, so then get formally approved at that meeting and then signed off by the chair and the accounting officer. Moving forwards in terms of the audit report, so once all the information is required right up to the signing date, when we're able to sign that audit report, and then everyone gets a copy for their records. The next stage there in terms of accounts laid before the members, I'll cover that in a bit more detail shortly. But essentially that will relate to the annual general meeting if one's required. And then last but not least, we have the filing. So for you, it's the filing with the DFE, the accounts, the audit finance report, and the internal scrutiny summary. And we send instructions in terms of what's required each year. And then you also have the 31st of Jan in terms of the website. Again, nothing new here. And then we've got the filing at Companies House prior to the end of May. We will tweak this in terms of the change to DFE, but just referencing really. So in terms of kind of making sure that it all runs smoothly, everyone's already aware. Part is good governance, which James will cover later on. So just making sure there's kind of a clear timeline, so all the meetings are booked in, everyone's aware of what their requirements are, submission dates, issuing of papers, all of those areas. And again, like a strong working relationship between us and yourselves really, so in terms of all working together to an agreed timetable, so all those deadlines can be met. And then, like I said, so throughout the year, like maintaining the strong controls really. So making sure that the handbook and the direction are all followed, all the internal controls are in place to make sure that the monthly meetings aren't missed. So it's a continuous effort throughout the year to make sure that it all works smoothly towards filing. So on to the next main bullet point on the slide in terms of the legal requirements. So this will be relating to what's included in your articles. So the latest models from 2021 made an AGM a must, whereas previous versions it was an optional beforehand. So it'll be obviously an important part is to make sure that the articles are known in terms of what requirements are for an AGM. The Charities Commission has also issued a useful guide called CC48 relating to charity meetings. So included within there, again, there's a section on annual general meetings, basically just highlights what the key requirements and guidance in terms of kind of how they're laid, notice requirements, those sort of areas. So in terms of practical terms for the AGM, so, it tends to be only a few members for most trusts. So it could be a conference call, like on Teams or Zoom, as opposed to meeting in a room. Often some members are also trustees, so it's likely that some of the members will already have seen it as part of the Board of Trustees meeting as well. So kind of they'll already kind of have seen them and know what's going on. And then quite oddly, I thought in terms of the AGM, so it can be after filed at the DfE because it only has to be on the earlier of date of filing with Companies House or the 31st of May. So it might be an odd position where they've already been filed with DfE prior to the AGM actually ever having been occurred. So just a couple of oddities there. And then finally, really, we have this fact sheet which you've all kind of got copies of, and we'll issue it around following today's forum by the end of the week. And at the back side of this is also kind of a template minutes in terms of what would be required to be basically just documented and held on file, really. And one thing which we'll be able to follow up on at the end of each year's audit.
Okay, we'll move on to Gary.
Okay. Thank you, Matt. Good afternoon, everybody. So, as Michaela mentioned earlier, in March 25, it may have slipped through the radar of most people, but there was some new guidance that was issued on novel, contentious, and repercussive transactions. So NCR for short. Less of a mouthful. Up to that point, pretty much the only guidance was in the Academy Trust Handbook. So it might not have meant a lot to you. There might not have been any sort of explanations as to what might fall into each of those headings. The new guidance is there, and it does seem to be pretty decent guidance. Within there's quite a few examples. I think there's 6 in total examples that you can refer to. None of those examples are going to truly meet perhaps your own transactions which you're looking for guidance on, but they might give you a bit of a steer as to parts which you can then apply to your own individual circumstances. The guidance is also not going to give you a definitive list as well of what would fall under each category. It just can't do that because there can be so many different circumstances out there. So, but it's a really decent read in terms of like the help it gives you, not in terms of riveting read. So I would recommend it. It's not a too long a read either. So please do have a look at it. The thing to take away from it, I think, as well, is a couple of points. One is if you're struggling to decide whether your transactions fall into one of those categories, is to get perhaps the DfE to adjudicate on that. So reach out to them to see whether they can adjudicate before you go for approval. If you can get a response. I know they're a bit slow on responding on other things at the moment. And the second one is really as well as documenting. So if you feel like you've got one of these transactions, is properly document it. Because if you ever get future challenged by the DfE, you want to be able to demonstrate that, you gave full consideration to it. The board was consulted. You didn't just look at the trust individually, you looked at the outside world as well, the public. You're looking at whether it's for public benefit. You're looking at whether there's any financial risk. You're looking at whether there's any sort of bad publicity could come back either on the trust or on the DFE. So you're not just looking internally, you're looking externally. So on that slide, we've got an example, the wording from the guidance as to what falls into each one. So we've got novel, so no experience of or outside the normal course of business. Contentious, so might cause debate or criticism. So this could be either from Parliament, from the public, and in social media perhaps. And repercussive, so likely set precedent or other trusts might follow suit because it's out there in the public domain and they think actually that's a good idea. Someone else has done it, we'll do it. It's important to note as well, it might not just fall under one of those headings. It could fall under all three. You just you've got to be aware of each of those headings. If once you've done your consultation, your internal consultation, or you spoke to the DFE, got their arbitration, it's then a requirement under the trust handbook to get DFE approval for that before the transaction takes place. Often, sometimes it can come to light as a part of the audit or some other internal scrutiny, perhaps. You can go for retrospective approval. However, there's no guarantee that they're going to approve it, even if you've done the transaction. So if the accounting officer has not gone for that approval, it's gone for retrospective approval, then they're likely to need to record that as a regularity exception in their statement in the annual accounts. Even if you then do get approval from retrospective approval, the auditors may still decide actually we need to make a regularity report as well, just on that transaction. So it's a good thing for trustees and yourselves to be reading that guidance so you understand exactly what may fall into those categories. So that's the approval, that's the implications. Like I said earlier, there are some examples. There's a 6 in total. I haven't put them all up on there because it takes some time to go through. The first one, this college, they were talking about potentially trying to reach out to a wider pupil audience. Perhaps they were a remote part of the country and pupils had to travel quite some distance to get to the college. So their idea was, we'll purchase some rechargeable electric bikes at a cost of £50,000. Seems quite cheap to me, but that was the outline of it, and the idea was that they'd rent them out to learners at a nominal cost. So the guidance really was sort of steering this one down the route of, this is a novel transaction. This is not something which you would normally do, and it's not something which other trusts have done as well. So that's kind of where they were leading with that. But also, have they really given consideration to what other financial risks are associated with this transaction? It might not just be a cost of £50,000. What happens if anyone causes any accidents whilst on these bikes? We all see these scooters and bikes being laying around cities. What sort of, is it contentious? What sort of implications can this have? But also, will other trusts follow? Because actually there's a sort of mandate to sort of environmental sustainability. Does this look like a good project to be undertaking? So that was one example where they thought, actually, no, this is going to need some pre-approval. Example 2, they gave where, and this might be one where actually pre-approval is not required. This college has football facilities. They currently rent them out at weekends to sports groups, and they were considering, can we make more income by renting them out an evening to other sports groups? But we'd need to install floodlights, all-weather pitch, etc. So on this example, they were suggesting actually this is not novel. It's something you probably do. Others do this as well. It could be contentious because of the fact that in the evening you can have floodlights. Is it a nuisance to neighbourhoods around there? Is there a noise nuisance as well? So generally it was felt, okay, this college in particular had gone for planning to get the floodlights or weather pitch. They've done the research actually the impact was deemed to be fairly low. And even that contentious part, actually, the trustees were willing to sort of take on that sort of minor nuisance to the neighbours as well. There is a further example 6, which probably doesn't fall into many people's position. They were talking about they've been donated a £10 million statue and they were going to sell it to do some repairs. So I don't think that's really going to be so you're all blessed with. But like I said at the start, there's bits in there that you can pull together and you can apply perhaps to your own circumstances. But one example won't fit all. So so not a riveting read, but a worthwhile read for your trustees, I think.
So, budget forecast return, that time of year again. So, as you all know, it covers the 3 years, 26, 27, 28. The form is now live for completion by the 28th of August. And no real changes from last year. Very, very similar. So, of course, you're completing this on the backdrop of the Labour government and what is their attitude to Academy Trusts. Again, who need to know more, I think. And obviously the spending review, which was only on the 11th of June as well, where, it was quite obvious there's some difficult decisions coming up for the government about how they spend the money around defence, health, childcare, education, and how that's all going to be split and how it's all going to be funded. So the spending review obviously covers the 3 years is 29 and then a 4th year for anything capital wise. So I think we're expecting another white paper in autumn, and that will cover some of the SEND funding in more detail, and much more in there as well, I think, but that's sort of the relevant bit for your information. So with all that sort of backdrop, I suppose, as you all know, as normal, you need to remain agile and be able to be flexible and try and react to what's happening, as it's happening, really. So I thought we'd take each area in turn and try and sort of pull together what's out there. And to do that, we've looked at the Association of School and College Leavers documents, the Institute of School Business Leadership, and the Confederation of School Trusts. So there's lots of information out there, and I don't know whether it's useful if I maybe pop up some facts and figures on the flip chart, and then the idea is if I give you all of that, then maybe after lunch you can then discuss that in your groups, and then we can come back and see if we can get any sort of consensus about what you're all doing on your BFRs. Let me try and weigh up some figures.
The National Insurance Grant for 25-26, you're going to receive that in October this year. That covers 1st of April 25 through to March 26. So you need to bring 5 months of that into your year-end accounts. But of course, that insurance grant isn't fully funding national insurance costs. Very hard to, everybody's slightly different, but I think the average is about 75% covered. So if you know what your extra NI cost is, what the calculation is, then hopefully you'll then know what the gap is to cover elsewhere. Special schools, obviously that grant comes via the local authority in May, September, and then March 26. So it's got special school money, just need to do that. Pupil premium, I think we know, is £1,515 for a private school. Secondary is £1,075, and the child £2,630. And the P grant is looking like it's staying again this year. 50% paid in the autumn and 50% paid in the spring. Same formula as before, 1%. Sixth forms, the teachers' pension scheme grant continues to be paid as a separate grant, so that might fix up a few. And then the other areas of income obviously are the infant preschool meals, wraparound care, which again might be new for some of you this year. Seeking new provisions came in, so making sure that that's covered in the year 12. And obviously the announcement around the primary school lunches as well. So all areas of income that, it's just wide open really. So I don't know if everybody got any thoughts about years 2 and 3 in terms of assumptions around income to share. Someone's either one. Very hard to predict it. And obviously the bigger aspect of that is probably for pupil numbers, your head count, your basic first place, it's on. So I don't know if everybody's the same in the same demographic, but most of us need to falling head count through quite seriously in those years. So costs, I suppose, is the other one as well, just to touch on. We're in an unusual position where we know teachers pay for September. So 4% of teachers pay. Support staff, again, information out there says there could be a 3% increase across all points. So 3.2 I think is what most people are putting in, and then the year after that 3, and the year after that 4. Everybody else has got their lead, you're just doing 3. You're just doing 3. Obviously, these are the big costs, aren't they? And then we've got general inflation, which, normally we're tracking the scores of CPI, which are predicted at the moment at 2.1 and 2. Obviously, that will move as changing advanced. And I expect that the next biggest cost is probably energy. And each of you will be in a different cycle, I'm sure, on your energy, depending on the contracts that you signed up to, or electric, gas, or oil. In general, the costs are coming down. They were till US and Iran and Israel kicked off. So it's hard to know really, but I suppose it's about looking at those contracts you have in place, whether they are applicable. Can you get better now? You break that contract with the break clause. Is it worth it? It has come down. Water, it seems to be bucking the trend there. Water costs seem to be going up through the roof, about 35% increase. If everybody's seeing that or not. And then other big costs: catering, cleaning, IT, payroll, HR support. Again, all probably linked in on what contract terms, so you probably have some idea what those increases are going to be. And then finally, insurance. ISBL are saying 0 increase this year, and then 2%. Don't know if there's anybody had any input yet in the RPA. I've done some maths putting in 8% as a projected increase. So knowing when you are and what plate you had. So DFE are running some BFR sessions, but I don't think they give away any percentages. I think it's more about how to fill the form, what you should think about. But if anybody does want to attend those, they are online, they are for free. But yeah, hopefully that's given you something to talk about in your tables. It might be useful if sort of maths get together, single languages get together, because you'll have slightly different outlook on life. So we just do this next poll, just so I can understand a little bit about where you are in terms of fundraising at your academy trusts. So greater than 10,000, that's quite good. some very, very minimal. Interesting. So I think the one key thing to remember is that as an Academy Trust, you are a charity, even though you're an exempt charity. So why not try and take advantage of this? You know, everything is being squeezed. So this might be an area that you might be able to just get a bit more from. And as you already know, you're already encouraged to take advantage of other sources of alternative income by hiring out your facilities and applying for grants and non-DFE. The typical grants that we see Academy schools apply for are the Woolston grant for capital items, Savoy Education, which covers things like home economics and kitchens, street fit, things like that. STEM grants for all the sciences, and Lord Tabner's often support minibuses. So those are the other type of external grants that we see success for Academy Trusts. Some schools have what you might call a school fund account, which is sort of the hangover from being a local authority school. And they continue to use that in a similar way they did before. And for instance, a lot of put out an annual plea to parents. So just a quick email letter. Would you like to make a donation to help towards the education of your child over the next X years, Y years? Here's a gift aid form. Fill it in. So just once a year, so not too heavy, just very, very polite. And that can quite easily bring in £10,000 to £15,000. Obviously that depends on where you are and your parents and demographic and whatever. But for one letter a year, is that not worth looking at? I've seen it happen. Some of the schools I act for do this regularly. So it might be worth considering that. And then also encouraging your PTA, whatever you like to call it. I know PTA is a bit more active in primary schools than they are in secondary. To fund things for you, you know, give them a task. Sometimes the head teachers get involved in these PTA committees and say, you know, we want a new playground and then they raise capital for that. Really try and focus them in. So some good PTAs raise between 10 to 25,000 for the schools. So again, it's just trying to encourage that more without obviously bringing more workload onto you guys, but just getting buy-in and letting them know what you'd like them to achieve, what targets you'd like them to hit for you. You can use the Gift Aid Small Donation Scheme, and this is a way for charities to claim 25% many cash or contactless card donations, which is £30 or less in value. So where might you use this? You might use it at sports day or after your drama production, and just ask parents to come along and make a donation, you know, to the school, you know, just as a collection. You know, rather than the cash buckets you used to see, you can just get examples and they can make a quick donation and move on, and then you can pay the gift aid. So it all adds up. Not under the school gift donation scheme. So if it's less than £30, you don't need that. Yeah. So the bigger donations, which is the next line of that slide, which may come from the letter that you go out the appeal. Yes, you'd probably like to get a gift aid form, or from alumni. Some of the alumni clubs that some of the secondary schools in particular run can generate some good gifts if there's an active alumni from that secondary school. And so it was good to have that gift aid donation form on a page on your website so that it's easy downloadable for a parent or whoever wants to give that gift. So you get that gift aid and you've got all the relevant information on there, which is usually the house name or number and postcode. Those are the only two things you need, and their full name and that they've ticked and they are a taxpayer. Then you can get the uplift of the gift aid. Legacies are that popular in the Happy Trusts, but I have had one or two that had some legacies left to them, which is lovely. And I think that was probably done via the alumni, and then that constant contact after, and the left things at will. So it's just having some very gentle touch points that you might then get that one off 100,000 legacy left to you, which would be a nice problem to have. In a successful way. There is also payroll giving, and I don't know how many of you have got payroll giving as part of your salary, your payroll package. So payroll giving is a way of staff giving money to charities, and it can be to you as a charity, or it can be to their favourite charity, Children in Need or whatever it might be. But again, it's a salary sacrifice arrangement, so that comes out of their gross salary, so it saves your employees tax. It doesn't save them national insurance, but it saves them tax. So in your pack there's a schedule on payroll giving. That's what it's called. So again, you can encourage your staff to make donations if they wish to your Happy Trust. It might be some of the high earners, but yeah, even if it's only 4 or 5 people within a multi-Happy Trust, it's all adding up, isn't it? So finally, my sort of challenge to you is, what harm is there to have a page on your website with your appeal letter, your gift aid form, any contact details should you wish to give, and really just sort of work on that really. Just need to, obviously we all need to start thinking differently about how we can cover some of these gaps in the costs versus income. So hopefully that's a little bit of food for thought for you. I think from what I know, you have a valid reason to contact them in the first place. So GDPR, they went to your school, you asked them if they'd like to join your alumni. If they say no, you have to take them off the list. But the first point of call, you have valid reason to contact you. So once you then get the funds to the alumni, you contact them as long as you have an unsubscribe. After that, it's fine. But yeah, it's obviously for your marketing person, whoever takes that hat, to come up with a plan. Social media is going to be a big part of that. So it's putting it out into the local press, isn't it? And parents to tell their children, etc., etc. It's that thing. It's very hard unless you gather it when they leave, or they'll stay there. What is your personal email? Which is what we do with our. So they keep saying, "Can we contact you?" Not easy, but it's just another tool inbox. I think we just got to think a bit differently, haven't we? But it's time, isn't it? With the wrong view, it's time to have. Where do you spend your time best? Move on to James.
Thank you, Kayla. So before I get into role of governance professional, I think a few people have to chat before about our hot topic, which is the ACSP. I don't know if any of you have come across that yet. So it's the Authorised Corporate Service Providers. So basically what this is a company's house requirement whereby everyone registered at a company's house, so your trustees and members and anybody submitting forms on behalf of the schools are going to have to carry out identity checks with the company's house. There's not an exact date yet for that, but autumn winter of this year for everybody to have the ID. Reason behind it really is just I think there's a lot of it. It's very easy to set up companies and submit forms for companies and directors and that kind of thing. So it's a bit of hassle. I think it's going to be a bit of hassle. I think clerks will be receiving those emails of a registered company secretarial person for your school. So it's probably is bearing in mind. I suppose if you've got some older members or trustees, it might need a bit of hand holding through the process. We've had that client starts already whereby they're getting emails. Some of them haven't even got passports and the driver's licenses, so it's going to be a bit hassle, I think, in the first instance. So what they'll need to do is register. They'll get an ID number which will then be used on future forms. So it's one-off registration rate. So I suppose watch out for that. Really. For a lot of companies, it's not so much of an issue. It's usually a couple of directors, a couple of shareholders, but for schools, obviously, there can be quite a lot of list of trustees. So there's a couple of options. You can do it yourself via the links that are sent out from companies' house. Professional service firms like ourselves, we will be registered ACSB, so we'll be able to help for people that are struggling with that service, I suppose. So
I think post office, another option as well. Post office.
So company secretarial, governance professional linked, but jump into role of the governance professional or clerk, as most of us probably know it. There have been some recent updates and clarifications surrounding the role. Not so much in the handbook, but more so in the National Governance Association document. So I'd just like to run through a few of the key changes or clarifications that have been added surrounding that role, really. So the first one is an increased emphasis on independence. So the clerk should ideally be independent from the academy's day-to-day operations, which probably is quite hard practically, I suppose, if you've got somebody that's been working at a school for a very long time. It means that it's now quite strongly recommended that the governance professional is an independent individual for even an external service provider, rather than someone that is an internal employee. The aim really is to avoid any conflicts of interest and to ensure partiality, really. Whereas in the past, whilst independence was a recommendation, it wasn't particularly strongly advocated in the guidance. So it really reflects the growing importance of bias governance, I suppose. The second point is the clarification of the advisory role. So again, previously, I think a lot of focus of the clerk would be quite administrative in terms of primarily arranging meetings and overseeing company secretarial submissions, that side of thing. But there's more clarification now in terms of assisting with financial oversight. So things such as help with the risk register, monitoring and following up of sort of audit recommendations and that side of things. So very much a support role for you, I suppose, as finance teams. I think historically a lot of that would have fallen on you, but there seems to be a bit of a shift now towards a governance professional assisting with that. There's also governance in respect of requirements for professional development, CPD requirements for somebody fulfilling that role. So the clerks are now explicitly required to keep their skills and knowledge up to date and maintain CPD records, really, of courses that they've attended and how they've kept up to date with latest governance law, educational policies and best practices. And I think there's a real focus on the importance of specialist qualifications in that area as well, particularly as, with larger trusts. It's very much been emphasised that, things like, there's a few here, so NGA certificate in governance or professional clerking qualification. So it is very much becoming a more specialist role, I suppose. I mentioned before about the National Governance Association. That's got some really good courses and some guidance on there. So I definitely suggest putting your clerks in that direction. Perhaps attending some of those or watching some of those webinars. A further point that's been added is some clarity surrounding clerk's role in maths. So I don't think there was any particular guidance really. It was left to schools themselves to decide how many clerks they needed, whether they need to come through school, that sort of thing. Whereas now it just specifies that it allows for a single governance professional to serve multiple schools. But what it does add is that if the trust covers a large geographical area or operates a number of schools, there may be, you may need additional support, not only because of the amount of work, but also to maintain independence, avoid conflicts of interest as well. And then final point, just to add on this is about the appointment of the governance professional here. Guidance clarifies that the board should be responsible for appointing them rather than the executive leadership. So it sets them out guidance as well. As I mentioned at the start, we are starting to see increase in school sheets and external providers for this, but obviously there are pros and cons of doing that. You get greater degree of independence with an external provider, but at the same time, I suppose they don't know culture and history of the trust. So there's very much weighing up pros and cons of having somebody internal or external. One other benefit of using somebody external is probably you are likely to get somebody with a bit more expertise in most cases, I'd suggest, and somebody with access to more resources. So if they're looking after a number of trusts, they're likely to come across lots of different issues that they can then utilise those skills for your own schools. So I suppose to summarise, it's just being aware of these changes, the emphasis and clarification on that role, considering whether your clerks are fulfilling that as they should be. Of course, it very much depends on the size and complexity of your trust as well, in terms of who you're using, what you're using it for. I can't see it becoming a must. I think for the time being, it's going to be depending on the size and complexity of the trust, I'll be honest with you.
If you can demonstrate that, you can consider that they are involved in other management decisions. But prior to using external people like Judicia, another your clerk, somebody using Hampshire, Wiltshire clerking, and then there's just individual independent clerks. But still, the majority of you are doing it internally.
So would it capture the seat of the head?
Yeah, I think they probably should be reporting more to the trustees. It's the independence, isn't it, I suppose, that needs to be considered if there's any influence that you're having over their role. How that impacts on decisions. Oh, yeah, so school properties in accounts. If you wouldn't mind just answering quick slider. Yeah, yeah. I mean, it's not real size out of those. Absolutely. Very. So, property valuation of properties. I think this is probably an area that everyone's familiar with. What's included in the account of properties. As we can see, most of us have used the ESFA, the FA valuation to bring those into the accounts, which is absolutely fine. One issue that we've been seeing in recent years is through growth of trusts and where schools are onboarded, you convert to the academies into trust, and the fact that the DFE aren't carrying out valuations until you will not receive the valuations until the March after the end of the accounting period at which schools are onboarded. That has been a bit of a problem in recent years, we've found. So in terms of the options available to schools, just to set those out, of course you could go out and obtain your own valuation and pay for that service, which it's not cheap, and whether or not you would consider that to be value for money for the sake of just getting a number of accounts on. I'm not so sure. I'm not so sure how the trustees would think about that. In some instances, we have seen local authority give valuations, although they seem to have gotten on the last couple of years to charge for those as well, which is not ideal. And the third thing really is, and this is something that has happened over the last years for a few of our schools, is to accept that you're going to have a modification in the audit report. It is a qualification, it's material amounts for the accounts, but I think a lot of people, when they hear, qualified audit report, they think, no, this isn't good. But actually, when you sit down and think about it, if you explain it properly, it counts. So why you got the valuation? Actually, I don't think many people worry about it, too worried about it. Modified audit report specifically refer to the fact that a valuation has been completed for the land buildings for the school. And what would ordinarily then happen is in the following year, once we have that DFE valuation report, then the prior adjustments then recognise the value at that point. So the reason for raising it really is it is something we're seeing. And we have had conversations where we go to trustees and suggest qualified audit reports. They get a bit worried, but I suppose the point of this is just to reassure you that actually it's not something you should be particularly concerned about. It's obviously it is described correctly in way 130. But, that's not to say if trustees want to go out and obtain valuation. By all means do so, but I suppose it's just setting out this option for you. As it may be something to cut across, especially if you push multi-candidate trust and growing trust. So, just something to bear in mind. The other, just brief areas to touch on is church schools. I don't know if this affects, but sometimes, so in terms of the recognition of land and buildings, church schools, it's not definitive in terms of you are the school, so you have to recognise that as an asset for school. A lot of it comes down to most of the schools want supplemental agreements with the diocese, which will set out who has the rights to cure improvements. It all comes down to the rights of use and decisions, I suppose, over that asset. So it's not a case of definitely recognising that as a balance sheet. There's guidance with the council direction that sets out rules behind when you should or should not recognise that as an asset. So again, I'd suggest going to us rather than that situation, that we have a conversation and look through the guidance with you and make that decision early on. Just to go back, sorry, on the valuation point, I think if you know that you've got a school that you're on board in, it's probably worth going to the trustees early rather than later to make a decision on whether to obtain a valuation or not, because it's not necessarily a quick process. And we have got back to the point where you get the order, the decision's not been made at that point, you have to have conversations and make decisions quite quickly. So I suppose a senior you can have that conversation about that. Yeah. So what's no interest? Any questions?
Right. No, I think we're there. Thank you for coming and thanks to the speakers today. My final point is really just to say, if you fill in the feedback forms at your packs, we'd love to hear any topics you want to cover in the next forum. Next forum is in September, 16th September, which will be held online. And we have set the Chair of Trustees, Chair of Finance meeting on the 10th of September, which again is online. So please do encourage your teams to sign up for those if they want, and that'll be a summary of what to expect in this year's audit for your trustees. But just needs me to say thank you very much for your input today and please do stay around, have another coffee, network, graze, and we'll be here for any sort of one-to-one questions. Thank you.